Welcome to my channel, LetStock. Today's video is going to be about a tech giant which is making headlines in global markets with latest AI technology. Everyone has been talking about ChatGPT. Like me, have you also been thinking how you could potentially monetize on this significantly growing AI technology? Well, as a curious nerd, I have done my financial research on one such company that is quickly integrating AI into its core business and is expected to offer innovative solutions to its customer. Let's talk Microsoft. As I discuss this further, I'm sure you will be surprised like I was. The IT products that we've been using complacently in our day-to-day office work will soon be integrated with ChatGPT. And guess which products which I'm talking about? It's Microsoft Word, Excel, PowerPoint, and even their search engine Bing. Microsoft invested $1 million in OpenAI back in 2019 in exchange for an exclusive license for the technology, and just recently announced an additional whopping $10 million worth of investment in OpenAI. Then, you must be wondering, what is this OpenAI? Let me make it simple for you. It is a Silicon Valley-based AI research and deployment company, co-founded by some prominent tech players, and to name a few: Elon Musk, founder of Tesla; LinkedIn co-founder Reid Hoffman; Sam Altman, president of Y Combinator companies like Airbnb and Dropbox. He's also the CEO of OpenAI. To make you understand the Microsoft's business better, I will be discussing the key parameters like stock price, the shareholder pattern, the key financial numbers, and the most important, the long-term strategy of the company to help you decide whether it is worth considering the stock in your portfolio. Microsoft's share price is currently trading at $279. Although its short-term one-year absolute return is minus 4%, but on this channel, I'm always going to encourage you to be a long-term intelligent investor. Microsoft 5-year absolute return is solid at 13%. The 5-year CAGR for Microsoft stock price is at 26% each year, and if you were to adjust it for USD CAD FX impact, the CAGR would still be greater than 20% a year. As you can see, the Microsoft's 5-year absolute return is beating the US index Nasdaq return and is significantly beating the Toronto Stock Exchange index return. Just to put it into perspective, back in 2018, we could have bought the share for just 100 USDs. Then we can always begin now and be an intelligent investor. Now, let us quickly look at the major shareholders and promoter holdings in Microsoft. Institutional investors hold majority ownership at close to 73% of the outstanding share as of December 2022. Mainly accounting for mutual fund management companies and institutional holders. Here are the top 3 shareholders of Microsoft stocks. Vanguard is the largest shareholder in Microsoft and is also the largest mutual fund provider in the US. Second largest shareholder of Microsoft is BlackRock, which is also the largest asset manager in the world in terms of asset under management. A fun fact here, the Vanguard Group is also the largest shareholder of publicly traded BlackRock stock. When it comes to investing in shares, one important factor to check is the company's management and promoter stake. They are the insiders of the company with a clear understanding of the business plan, growth perspective, and its vision. For Microsoft, 0.06% of outstanding shares are held by insiders as of Jan 2023. But mind you, in volume terms, this accounts for a significant volume of 4.24 million shares. These shares mainly account for Microsoft CEO Satya Nadella, President and Chief Legal Officer Brandon Ford, Executive Vice President John Finot-Curtis. Let me show you an interesting observation here. There are few large purchases of Microsoft done by insiders in recent few months, highlighted in the green plus signals in the chart. Just a heads up, these insider share percentage changes are not a direct indicator of company's growth or confidence in the company management. As we discuss further, there are a lot of supporting factors that need to be taken into consideration. In most cases, if the shareholding of the promoter is high, it simply means that they are optimistic and confident about the company's growth and can take it to new heights and alongside consistently create wealth for shareholders. Now, the most important paramount aspect in financial research is checking the financial profitability and health of the company. Let me make it simplified for you with key numbers, ratio, and long-term growth driver strategies of the business. Microsoft sales comprises of 3 segments. The most profitable and the largest segment contribution currently comes from Intelligent Cloud that includes server products and famous cloud services like the Azure, SQL Server, and Windows Server. Second is the productivity and the business processes segment. This is the game changer. ChatGPT is expected to be integrated into this segment with products like Office 365, SharePoint, Microsoft Teams, and Microsoft Viva, to name a few. Microsoft's decision to implement AI technology into its existing ecosystem opened doors to various new direct and indirect monetization opportunities. The latest one being launched as Microsoft's Dynamic 365 Copilot, which is a co-piloted CRM and ERP solution that brings AI to every line of business. This is definitely a long-term growth driver and increases the business attractiveness. Revenue from LinkedIn is also included in this segment. It will be interesting to see how AI-based growth catalysts create additional shareholder value in the coming future. The third segment is the personal computing, which includes other window commercial offerings, PC accessories, HoloLenses, and gaming Xbox. This is another growth driver to look out for as Microsoft announces its recent acquisition proposal to Activision Blizzard. It is a pre-listed entity in US and is a game changer in game development and interactive entertainment content publishing. If the acquisition goes through and Microsoft receives regulatory approval by mid-2023, it will become the third largest gaming company in the world by revenue, just behind Tencent and Sony. It will also help Microsoft monetize popular gaming franchises like Call of Duty, Candy Crush. One more interesting fact here and a point to note. Most of these graphically intensive games likely require use of cloud. Now imagine ChatGPT being implemented in future in the gaming user interface. It's a game changer. If you see Microsoft's financial number, it gives you an idea of how profitable the company is. Over the last 5 years, as you can see, the sales have been increasing with a 5-year CAGR of 13%. Definitely a healthy sign for company's growth. Once all the direct and indirect operating expenses to run the business are deducted, the net income is the key income parameter to check as it contributes to building equity for the company and also helps us determine whether a company is in a sustainable position to expand its business, in turn increase shareholder value by either paying dividends to the investor or the stock appreciation. For Microsoft, as you can see, the net profit has also been increasing over the last 5 years at a CAGR of 32%. This is also supported by upward trend in healthy profit margins. On a continuing note, as mentioned earlier, the growing profits build equity. Let's validate it with balance sheet numbers now. To simply put it, equity represents the shareholder value, which is nothing but amount of funds contributed by the owners, shareholders, plus the retained profits for expansion. Microsoft's common equity has been increasing over the 5 years, which is a sign of a very strong balance sheet and a very important aspect of company's growth potential. It also helps build the confidence of the years in the company's management by the Indian origin-based CEO Satyanarayana. The company's long-term debt has been reducing over the years, another good indicator in times of high interest rates globally, and also this indicates that the management is allocating more capital expenditure for expansion rather than capital to repay the debt. A strong cash and short-term investment position of $100 billion, supported by reducing debt, is indeed a positive sign for Microsoft business profit sustainability, even in rough times. To sum it up, the equity and the debt are used to build assets that generate free cash flow. For Microsoft, assets have increased at a healthy 5-year CAGR of 7%. The rising free cash flow of Microsoft business reveals the true picture of company's financial performance. Ultimately, what matters to the stock investors is the return on equity, which is on an upward trend and close to 44% in last June 2022 fiscal year. Microsoft's consistent profits to build equity, declining debt, strong cash position over the years, and increasing free cash flow definitely makes Microsoft an attractive long-term LetStock option to consider in your portfolio. Let me know in the comments below what are your thoughts on Microsoft. See you soon in next video. Until then, let's talk.